What's up, everybody? I'm going to tell you how you can understand any company you want in 10 minutes or less with one document for free. I'm going to tell you exactly where to find that document. All right, we're going to start by finding the company you want to. Today, we're looking at Palantir. Go to investors.palantir.com. You can Google IR and then the stock name you're looking at. So we're looking at Palantir right now. Then you're going to go to financials, SEC filings. So this is their investor relations page. And then sometimes you'll have to sort. And what we're talking about, the one document that you can read is an annual report. That is a Form 10K. Companies have to report that to the SEC. All right, when we jump into the 10K, it's 165 pages. You need to read maybe 10 of those pages. Let's talk about exactly which ones. Okay, we can jump to the table of contents, and here are the only sections that I really pay attention to. The business, to understand the business, the risk factors, you don't have to read every single one of them. Some of them are standard across all companies, but there are some specific ones. We'll get into those. Then we're going to jump to management's discussion and analysis of financial condition and results of operations. That's talking about the last year's results. Quantitative and qualitative disclosures about market risk. Not a whole lot in there, but we'll touch on it. And then financial statements and supplementary data. You want to touch on directors, executive officers, and corporate governance a little bit, as well as executive compensation to start to get an idea of if their incentives are aligned and how the executives are compensated. And then security ownership of certain beneficial owners and management and related stockholders. I love to see management that has ownership of the stock. You know, we see all this stuff about Palantir. It's wild. There's so much stuff out there. If you look at the business overview, it's actually pretty short and they break it down pretty simply. We build software that empowers organizations to effectively integrate their data, decisions, and operations at scale. They were founded in 2003, and then we have built three principal software platforms: Palantir Gotham, Palantir Foundry, and Palantir Apollo. Then they go into a description of what each of those are, and you start to get an understanding of the business. The vertically integrated nature of Gotham and Foundry allow users of varying technical abilities to collaborate effectively in our platforms. Data engineers can integrate new data sources, analysts can clean and transform data, data scientists can write models, business users can conduct daily workflows, and senior leaders can make critical decisions. The two platforms can be either used separately or bundled together in a single ecosystem. Gotham enables users to identify patterns hidden deep within data sets, ranging from signals intelligence sources to reports from confidential informants. It also facilitates the handoff between analysts and operational users, helping operators plan and execute real-world responses to threats that have been identified within the platform. Gotham is now used broadly across government functions. In my opinion, this is the most interesting piece of Palantir's business and where they have the most moat. On the public side, that can be competed with a lot easier than on the government side, in my opinion. You can start to get a feel for the customers. We work with many of the world's leading government and commercial institutions. As of December 31st, 2021, we had 237 customers. For me, that right there almost alone is the reason that I am not willing to invest in Palantir right now. There are not enough customers. I talked about the risks and why I'm not interested in Palantir compared to other options in a previous video, but I don't like businesses that don't have a lot of customers. Next segment is the overview, jumps into the revenue distribution. They have 58% came from customers in the government sector, and then 42% came with the commercial segment in 2021. They have a global presence. They earn 57% of their revenue from the United States and 43% from those abroad. And they even break down the average revenue per customer. Every company is going to be a little bit different, but these are the types of things that are covered in the business overview. Talks about customer acquisition, how the software work, how the industry sector, and this isn't a deep dive on Palantir. I can do another one on it. I'm more just covering the 10K and what to look for in the 10K. So we're going to skip through some of this stuff. Okay, that covered the business a little bit. Let's jump into the risk factors. So right here is a risk factor summary. They're going to talk about things. We've incurred losses each year and may not become profitable in the future. Any company that has incurred losses has to say that. So it's not just Palantir saying that. We may not be able to stay in revenue growth. Every company has to say that, basically. Here's the ones I really look out for. Something specific, like our sales involve considerable time and expense, and our sales cycle is often long and unpredictable. That's not something that every company has to say. That is specific to Palantir and those types of businesses. So that would be a flag for me and something specific to the business that I would watch out for. I also really don't like this, like I just talked about. A limited number of our customers account for a substantial portion of our revenue. That means if they lose one or two of them, they're in trouble. A lot of these other things are just kind of like standard risks, but you can skim the risk factors and find, things that you might need to dig deeper into for each company. Okay, management's discussion and analysis of financial condition. This is just like they're reporting their numbers. So you would dig in, you'd start to understand the company. What is their growth rate? What is their earnings per share, negative earnings per share? Are they losing money? Are they making money? Are they doing better than in years past? Do they have a path to profitability and sustainable growth? That's what you're looking for in these numbers. You can dig in a little bit more to the business, their customers, and start to understand how many customers they have, where that revenue is concentrated. And here's a big thing that people often don't look into to understand about the companies that they own, the business model. And so they lay it out right here. The customers pay to use the software platforms they have built. On December 31st, 2021, we expect to generate revenue under our existing customer contracts for an additional 3.5 years on a dollar-weighted average contract duration basis. That means on average, they have 3.5-year contracts. Okay, let's jump down to directors, executive officers, and corporate governance. Okay, to get to the executive compensation and the security benefits, the ownership of specific individuals, you actually have to jump over to their proxy filings, which is a DEF 14A. But let's jump into that. And so right here, security ownership of certain beneficial owners and management. You can see if the executives or the founders are still involved, if they have ownership in the stock. And in this specific example, generally you're going to look at Class A. That is most of the shares that a company issues. And we could see here that all executives, officers, directors, and director nominees as a group, which is 11 people, own 7.4% of the Class A shares. The Vanguard group, that's in their Vanguard funds, they own 6.5%. And so in total, founders own 7% of the Class A shares outstanding. If you enjoyed this video, you can help out the channel by liking it and subscribing to the channel and come back for more. Let me know in the comments what else you want me to cover and teach you about investing.